We're at REIT Week 2010 in Chicago, and I'm joined by Craig Macnab, Chairman and CEO of National Retail Properties. So Craig, what are the biggest challenges in owning the property types that you do versus some of the other segments of retail?
So one of the things that's interesting about our business is even though we have $2.5 to $3 billion of assets, we are a leader in a market category that's bigger than the mall space. So we're no different to any of the other retail REITs. It's just that we focus on a more narrowly defined niche, which is freestanding net lease retail properties. So these are properties in front of malls, in front of community shopping centers, in front of power centers, the corner of Main and Main. And it's a very, very big space. We like the fact that they are small properties, which keeps a lot of the competition out. And why does it keep it out? Because the big institutional players don't have an appetite for $2.5 million properties. So we own 1,000 different properties, $2.5 billion, lots and lots of $2.5 million assets.
And what's your outlook for the space for the rest of this year heading into 2011?
What has clearly been determined is that retailers have higher productivity in freestanding net lease locations. So why is it that here we are in Chicago, Walgreens is headquartered here, they're continuing to open new freestanding net lease retail locations? Because they have better sales productivity in that location than they would in a shopping center. So the outlook for the next couple of years is continued measured growth.
Touching on that optimism, what trend has you the most optimistic? And we've always got to look at both sides of the coin. Is there anything that's given you cause for concern?
I think the big trend for REITs and National Retail Property is going to be right at the forefront of it. Is we know that in our country there are lots and lots of people my kind of age and a little bit above who are thinking about retirement who haven't put aside enough money. One of the virtues of REITs is we pay a high dividend, and National Retail Properties is very focused on our long-term track record of dividends. Our current dividend yield is better than 7% a year. So if we can sustain our dividend, which we have for the last 20 years, and get a couple of percent growth a year, 7% dividend, couple of percent growth a year, that gets you to 9 to 10% annual shareholder return. If we do that, I'm very hopeful our investors will be saying thank you very much.
And you mentioned dividends. National Retail Properties' tagline is the dividends are here, and you mentioned the 20-year streak. How have you managed to maintain that, and why is that so important to your shareholders?
Whether we like it or not, some people think dividends are boring, and certainly when I was at graduate school or whatever, I never thought I'd pay a lot of attention to dividend income. But the fact of the matter is 2/3 of the total return from the equity markets comes from dividends and so forth. So I'm very positive about REITs for the medium term. Companies like National Retail Properties that have grown the dividend for 20 consecutive years. You can't extrapolate the past to the future, but history is your friend, and hopefully we'll be able to continue the dividend.
Dividends certainly are king. Craig, thanks very much.
I appreciate it.
For more on REIT Week 2010, check out REIT.com.